traders. Hope you guys are having a great weekend. I just thought I would make an additional video than I would normally, going over some of the top swing or position trades that I'm really looking at the moment. A few of them just came across my screen, and I just happened to look into them a little bit. Financially, they're very sound, and on a technical basis, they're very good too. And I'll show you why in just a second. If you go back to my video I made about McDonald's, when I bought them at $249.52, I believe it was, I bought them right over here because we're coming down to that 200 EMA and SMA. Put my stop loss on the other side of it, made out nicely on that, and you guys could always go back and look at that video if you don't believe me. And then on the other, I'm going to go over in just a second the other two stock picks I'm going to be looking at to buy this week. Now, if you guys appreciate this content, please like it, subscribe, comment, maybe leave a comment about a stock you want me to go over next. I would more than appreciate that. But without further ado, let's get into it. So, McDonald's, we all know, went up. Very nice trade. Now, the other two that I'm going to be looking at for this week is going to be Walmart. Now, normally I like to buy swing positions on a weekly chart because there's a lot more momentum behind it. But every once in a while, I come across a stock and it looks better on the daily than it does on the weekly. Now, as you can see here, for the past, let's see, when was it? I would say about a year, roughly. It's more like 8 months, but let's call it roughly a year. This 200 SMA, the purple line, and the 200 EMA have been heavily respected on Walmart on the daily. They end up beating earnings, but their guidance was negative, leading to a big push downwards. Now, I think this is a bit of an overreaction because the fundamentals are still the same. The technicals are showing upside. So I think there's, in my opinion, I think there's substantial upside with very little downside. How I'm going to be playing this stock is I'm going to be buying shares in Walmart. I'm going to be opening a $10,000 position, putting my stop loss at 152, and I'm going to be targeting the 169. So in terms of risk to reward, we're talking about a let's see here. We're talking about a 2.63% stop loss for about a 9% gain. That's what I'm kind of looking at. And once this goes about 5% in my favor, maybe 3% in my favor, I'll probably do 3%. I'm going to put my stop loss to break even and then start taking some profit. But that's what I'm looking at for Walmart. And then for Coca-Cola is my other pick. Now, on the daily chart, it looks very ugly. But on the weekly chart, we got a completely different picture. As you can see here, I'll turn to a 15-year weekly chart. That's a monthly. So the weekly. As you can see here, for the most part over the last 15 years, Coca-Cola, with a few exceptions, has respected the 200 EMA and SMA. Now, we did break below it quite drastically, which I think it was a bit of an overreaction to the situation. So what I'm looking for is we end up reclaiming the 200 EMA and the 200 SMA, thinking that this is a very low risk, high reward situation. My plan is I'll put my stop loss probably, I think putting it about at 55.49 would be the best bet. It's on the other side of a major technical barrier. So if the market goes down, if Coca-Cola goes down to that level and closes below it, it would be very hard for Coca-Cola to do that because you have the 200 EMA and the 200 SMA. So making this a high probability setup that the market's going to continue further upwards, and let's just say that hypothetically it goes down, I have the positions hedged with the McDonald's position, which I think McDonald's is a fantastic pick for the next couple of years. You could also do some call options if you wanted, do some covered calls on the 100 shares of stock that you buy if you end up buying 100 shares of stock. But that's what I'm looking at for this week, and good luck, traders.